Elliot Kwesi Eli says it's unfortunate, it's disappointing. Abdullah Abdul Razak says it is really disgusting and the leadership of the party must show some level of maturity in handling issues of this nature. Prince B. Van also says unreliable party can't even manage their own affairs and expecting Ghanaians to vote you to power. It's a shame for a son to behave this way to his father. Okay, Samuel Bessa Simons Jr. says, seriously, the country is sinking. And there's another one. Albert Cumbrown. Okay, no, Albert, I will not read your message. I think if you want us to read your message on air, you have to come clean when you're sending a message on our Facebook page. Otherwise, I will not share it with everybody else. So I'll move on to Young Prince, who says, I think some leaders in the party want to destroy our recognition to the world, which will not come to pass. We are peaceful. We are a peaceful party. Okay, that's what you also said. You're also saying, Julius Rocky says, MPP leaders be tactful before there is a divisionism in our party. Okay, but you know, the former President Kufuor has also been commenting on this. He issued a press statement and he's saddened by protest and mayhem at the New Patriotic Party headquarters yesterday, Tuesday, and the former President John Agyekum Kufuor has appealed for calm, urging its members to exchange ideas and not blows. Definitely a lot of fallouts coming from what happened at the NPP headquarters, but I want to talk to you about something that is really important. We all know the times that we are in, and we continuously describe it as a very difficult period. But people in the investment sector will say it's a very good time to invest. I have been thinking about it carefully. Why are they saying so? And if you don't have enough money, how can you invest? But they always say that you have some small money sitting somewhere, that if you were to invest in something meaningful, you will make great returns. So this morning, we decided to bring in Emmanuel Chigbe, who's a Deputy Head Brokerage and Research at New World Securities, to share with us some of these things that really you would not hear from anywhere except for the AM show. So I'll open the phone lines later on so you can also join us with your thoughts. Emmanuel, thank you for your time. Good morning.
Thank you for having me.
So why is it a good time to invest now? I mean, things are hard.
Yes, well, that's what the ordinary person will say, that things are very hard, and for that matter, they don't really have much to do investments. But for some of us who happen to be in the industry, yes, we don't think so, because this presents an opportunity for especially those on the buying side to bargain at very huge discounts.
Okay.
And for that reason, they tend to get what they're looking for. All it takes is that they just have to wait for some time for the market to just pick up, and then they realize their gains.
Okay. So what can we invest in?
Yes, there are various instruments available for any person to actually go into. This includes the stock market, which has quite a number of listed equities. We have quite a number of banking stocks in there that come very attractive to the public. We also
but you see, when you monitor the news, the business news, they will tell you this bank made losses, and these days you hear a lot of losses, 20% loss, you know, blah, 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 blah. So why should I invest there?
The latest results that are released, that's the half-year result, we didn't see banks making losses.
Okay.
Maybe what we saw for some of the banks where their bottom line actually dipped slightly.
What does that mean?
What that means is that if, let's say, last year they did 20 million in profit terms, maybe this time around they reported a profit line of, let's say, 80 million Ghana cedis.
Okay.
Yeah.
Okay.
Yeah.
So, but that's not a loss.
No, that's not a loss. It's just a reduction in their profitability. Yeah.
I hear it's also a very good time to get into the treasury bills business. Yes,
rates have been very high in that particular market, currently hovering around 24–25%. That notwithstanding, we think that is not sustainable because government actually aims at bringing rates down. So a smart investor may opt for other instruments other than the treasury bill market.
Oh, really?
If you still want to be in the treasury bill market, then you should be logging your money for a long term, not those short-term instruments, the 91-day instruments. Yeah.
Oh, okay. So what's the advantage with the long term? And if you say long term, for how long?
Yes, we have 1 year instruments, we have 2 year instruments. What that means is that if you have to go in now at, let's say, 20% in interest terms, you tend to get that 20% over the 1 year period. But if you to go in for the 91, the shorter dated instrument, which is around 25% now, should rates dip significantly, then you tend to lose out because you don't then get the 25% that you were paid. Right. And one other thing that investors don't tend to understand is that they tend to believe, or they tend to think that the 25% that is quoted is actually for just the 91 days. It's actually a 1 year instrument. So if you are to buy a 91-day instrument, for instance, you don't get 25%. What it is that you get is the 25 divided by 4, because we have 4 of 91s in the whole year.
Okay.
Yeah.
Okay. Okay. So you're also giving us other areas. I mentioned the treasury bills, but you were saying you can invest in the banks.
Yes, listed equities on the Ghana Stock Exchange. We think, yes, there are still very good instruments in there that investors can take advantage of. Most of them are actually in the banking sector. We have some also in the manufacturing. This includes the like of Farmwork that in recent times has been dipping. It's
and I think Guinness as well.
Yes, Guinness as well. Guinness actually opened the year at 6.2. Ghana cedis, but currently trading at 2.5 levels.
Okay, so is it a good time to buy shares for these companies now?
Yes. Let's say someone bought it when it was that high, right, and it's now 2.5. It means the person has lost more than 50% of his investment.
Okay.
But for someone who is going in now, right, should things turn around and the stock should even rise back to the year high.
Okay, so what it means is that if you're going in now, you're buying it at a cheaper rate. At a cheaper rate,
yes, that's correct. That's
okay.
Correct.
But it means that if you bought it high and it's gone down, don't sell it, keep it there. Is that what you say?
Yes, it's better
because
to keep it because the only time you actually make losses when the price drops is when you sell. Right. But if you have to hold on for it to bounce back, you recover. And probably make some good returns on it as well, should it go beyond the price that you actually bought it. Yeah.
Okay, so buying into shares listed on the stock exchange, getting into or buying treasury bills, and then what else can you do?
Yes, we know the real estate sector is still booming. Just that it's quite it's capital intensive.
Intensive, yes.
For one to go in there. That notwithstanding, we think people can still partner others to take advantage of that. Let's not forget we also have bonds. We have fixed deposits as well that people can also
How does that one work?
We currently have a number of listed bonds, government bonds on the Ghana Stock Exchange that people can trade in. We also have corporate bonds in there. They are mostly fixed in nature, in the sense that it has its own duration, and you also tend to know how much it is that you get whenever they're paying interest on those instruments. They come as safer instruments compared to investing in the individual listed equities on the Ghana Stock Exchange, for instance. So they are there to also serve a certain class of investors.
Okay.
They are safer, right? So for those who can't take risks, those are the kind of instruments.
Is it long term or short term?
It's mainly long term.
Okay.
It's mainly
like
long
how
term.
many years?
We currently have 2. We have 5 years. We have 7 years instrument on the Ghana Stock.
And ideally, you're making profit like how much? Like
returns? We actually have various coupon rates on them. It's actually hovering around 25-27% now for most of the instruments in there. Yeah.
My other question is, what happens to the value of the profit that you've made, the return that you've made on what you are investing, say in the next year or two when things are better?
Yes, it definitely goes up. your
Does
investments.
it? Because you see, our currency is depreciating. Does it affect it in any way?
Yes, it does, because if someone were, especially the foreign guys, whenever they come into the market, right, they come with their hard currencies, and in a situation where you see the local currency depreciating, then it means because they bring in hard currency, which is converted into the local currency. So let's say you convert, you get 1,000 Ghana cedis,
a lot
right?
more.
Yes, you get a lot more, and let's say it actually comes to 1,000 Ghana cedis, right? And the cedi should actually depreciate maybe about 30%, right? It means you'd have lost 30%, or it will take you need 30%, right? Monetary terms to actually buy back the dollars that are used in investing.
So unless you're not thinking foreign exchange, you're thinking the local currency. Then it's good to invest.
That's correct.
Ooh,
that's correct.
Okay.
That's correct.
Okay. So can you borrow? I mean, is it cool to borrow from the banks to invest?
My response to that would be yes and no. Yes, depending on what kind of investments you're going to do. What most investors, especially the retail investors, fail to do is to take certain factors into consideration. Let's say you're going to borrow at a rate of 30-35%, right? Inflation is, let's say, 20%. You should actually factor all this, right, in considering the kind of investments that you do, because what it means is that you should be making returns more than this, the sum of these other two factors.
Okay.
Right, because at the end of the day, you're going to pay the bank with its interest, and if we are to go into an investment that dips significantly, you then lose, right, and also you have the inflation factor hitting you as well. But if it's the kind of investment that gives you higher rates, right, considering these two factors, then yes, I'll say you can then borrow to borrow. To invest.
Okay. But can you tell the bank that you're borrowing to go and invest?
Yes, there are banks that will actually go ahead and advance the facility to you, but that depends on the kind of vehicle that you're actually going to put the money into. Yeah, for very risky vehicles, banks will normally shy away from yeah.
Okay, but if you're not going to invest the money, is it a good time to borrow?
I didn't say no. I didn't say yes, because if you don't really have anything in mind to use the funds for, that will enable you to pay both the principal and the interest. I'll say no. Yeah.
But we're looking at things getting better by the end of the year. So you still can, right?
Yes, you can. As I said earlier on, the stock market, for instance, presents a very good opportunity for most people. I think one of the newspapers reported yesterday that the MPRA, for instance, is going to release the pension funds that is held onto for almost 4 years now. And knowing the structure or the allotment policy, you definitely have some of the funds hitting the capital market. And considering the amount involved, you're going to see prices go up. So I think, yes, the stock market presents a very good opportunity for people to look at.
What does it really mean? I mean, like in common terms, if they release the funds and then? Yes,
fund managers will end up channeling parts of the funds onto the stock market, right? And considering the fact that
is investing in something.
Yes, investing in listed equities. Consider that we only have about 34 listed companies on the exchange, some of which most investors wouldn't actually go into. I think what will definitely happen is that you have more funds chasing the very few, very attractive instruments that we have available. Yeah, so that could see the prices going up.
Okay,
yeah.
So I'm opening the phone lines now. You can join us if you have a comment, if you have a question for Emmanuel, give me a call. 0302-211-69102. 0302-211-69102. You can give me a quick call now. But I also want to ask if you've bought shares, but you find yourself in very difficult times and you want to sell. you would not make enough money, but would you get somebody to buy?
Yes, there are buyers on the market, just that most of them will want to go in at a discount. Especially for value investors, what they actually have at the back of their mind is to always go in with a certain margin of safety. So you end up selling probably a little below the price that is prevalent on the market here.
Okay.
But our advice that unless you really need the funds, right, don't just sell your stocks.
Okay.
Especially for the good ones. Don't just offload them.
Okay.
Keep them. The market will definitely bounce back. You can then take your profits and that wouldn't be a bad
Let me
advice
speak to
at all.
Nana, who's joining us from Micropone. Good morning to you, Nana. Thank you for calling.
Good morning, dear. I wanted to find out from the panelists whether it is also appropriate as an investment company to also borrow from other financial firms so as to also advance then at a little higher interest rate and then make profit after it.
Okay. Did you get that?
No.
If you're an investment company, can you go borrow to invest? Is that, Nana, that's essentially your question, right?
Yes, please.
Okay.
Okay, yes. As I said earlier on, before you actually make a decision to borrow or not, please look at the kind of returns that you're getting. If the returns will be less than the cost of funds, I wouldn't advise you actually borrow.
If the returns will be...
If what you get as a result of investing the funds that you're going for, right, the funds that you're borrowing from whichever institution, right, then I would advise you to go in for.
Okay, but can you make a clear, can you know from ahead that, you're going to make losses? Can you predict clearly?
You can't always get it right, but to some extent, yes, you can. If you to take, let's say, the money market instrument, for instance, the treasury bill, fixed deposits, and bond instrument, for instance, yes, at the point of investing, you know the rate, right, that you'll be getting. So you're able to calculate how much it is that you get from that particular investment.
Okay. But when base rates go down, for instance, the rate at which you're paying back that facility would go down, right?
Yes. That tends to go down. But the rates that we borrow from banks, right? It's in a way tied to the base rate, right? But when you speak to the bankers, the commercial bankers, they'll tell you that they don't use only the base rate in determining the rates they actually lend to the general public.
Okay.
There are other factors they take into consideration.
All right. Let's quickly hear from Matthew, who's joining us from the Bono Ahafo region. Good morning, Matthew. You're on air.
Good morning, madam.
Yes, sir. Let's hear you.
I just want to ask your panel. I went in for a facility from a bank, and then I invested into an investment company, which in every 3 months I earn 30% of it. But the facility, I'm to pay it within 3 years. So I just want to know, is it good to do that?
Okay. Can you hear Matthew? You can hear him.
Yes,
you heard his question.
I think I heard the question.
All right.
Matthew, yes, is it a case that you actually took the facility at 30%?
No,
or-
I think Matthew is gone.
Okay.
Yeah.
Yes, if he took the facility at 30% and he's getting, or he's placed it somewhere and is earning something more than the 30%, that will definitely enable him to pay for the facility that he
And
went
still
to
make some money.
and make some money. But let's not forget that there's always the inflation factor in there, right?
What does the inflation do?
Inflation basically ends up eroding your purchasing power. What that means is that if it's currently at 15.3%, right, which is a year-on-year figure, right, and someone were to have 1,000 Ghana cedis a year ago, the value of that particular amount, right, or that particular person wouldn't be able to buy the same kind of things that he or she would have been able to buy a year ago, because the value would have gone down by 15.3%. It doesn't mean that your 1,000 Ghana cedis will just drop to 850. No, just that you can't buy the same kind of or the same items you have bought a year ago.
Okay.
Yeah.
All right. Okay then. I think the phone calls will be it for now. We'll just wrap up. I'll just wrap up with you. So let's go over it again. It's a good time to go in for bonds, you say?
Yes, the rates are quite high now. Yes, I didn't hesitate at all recommending bonds to investors. Yeah.
And if you have shares, don't sell it off your own terms. Don't offload it.
Yeah.
Unless it is really crucial that you do so.
That's correct.
Okay,
that's
because you'll be making losses in that process.
Yeah.
Okay, all right. And then your advice on borrowing to invest.
People should always be very careful before they decide on taking those facilities, because especially from institutions that I wouldn't like to mention here, because if you're taking a facility that they say is 3%, please ask more questions, because that 3% is usually on monthly basis, or if they're even saying 7%, it's on monthly basis. So please ask more questions before you take those kind of facilities. Yeah, and I also advise that you please consult before you make some of these investments. Yeah.
Okay, really important. And I want to say thank you. Thank you very much for your time. Emmanuel Chigbe is a Deputy Head, Brokerage and Research, New World Securities. These are the sort of things that you do at New World, right?
That's correct.
Okay.
That's correct.
Okay then, Emmanuel, thank you for your time.
Thank you for having me.